own financial vision and your business financial vision.
All right.
Yes.
Wahome Gary, I hope you've heard all that. You being, the proprietor of an academy that literally gets into people's personal finances, how do you connect personal finance and how an individual deals with their own business finances?
Well, basically, all money ends up being personal money. Whether you're looking at corporate money, business money, it all ends up being personal finance.
Right.
And there are very many probable causes for financial ruin. People get into ruin for many, many reasons. Could be debt.
Right.
There's a lot of people who are taken down by debt.
Debt.
There are people who are actually taken down because they got involved in betting, gambling, get-rich-quick schemes. You know all those Ponzi schemes in town?
Right.
We have actually seen contingencies, unexpected events that come and bring financial emergencies or loss of income. And COVID-19 is a classical example.
Right.
Of course, sometimes we have seen sickness or long-term illness, maybe of the owner of the business. And that comes with a lot of costs attendant to that.
Okay.
We've seen risks like burglary. Businesses get wiped out by theft.
Yes.
You know, people can come and steal everything and the business comes to an end. We've also seen identity theft. I think it's a common thing that people steal your identity. They clean out your bank account.
Yes. Okay.
That's a possibility. We've seen dispossession and litigation. People who get into arguments that end up in court and end up in financial ruin. I know we've also seen social disorder.
Okay.
It could be things like post-election violence, riots, terrorism, war, and accidents like what was experienced in Beirut not too long ago.
Okay.
Where, because something wasn't done right, the whole city burnt down. And that resulted to a lot of financial ruin.
Right.
I know we see in perils, like we can call acts of God, like floods, and we've seen a lot of floods. I think we are all attuned to that. Can wipe out families, can wipe out businesses. We're lucky in this country, we don't experience a lot of storms, but occasionally we face lightning.
Okay.
We also have landslides, and we have seen landslides in this country.
All right.
And we're lucky we don't have earthquakes. So you can actually see the range that can take somebody into financial ruin, whether an individual or a business, are actually that many.
Right.
And I think the list is not exhaustive.
Okay. All right. Dr. Ali, thank you for that one. Let me rope in Abraham on this one. He has mentioned, those natural calamities, the storms and the landslides, and, maybe even a disease such as corona can come in and your business can get ruined. Is there a way you can actually plan for those ones? Because they're the personal ones, your debt, that is something that you can even go to, an academy such as his and learn. But now for natural calamities, how do you even see that coming and prepare for something like this? Case in point, COVID. No one ever thought a virus in Wuhan, a place we didn't even know, can affect us right here in even Kisii County.
Okay, I'll answer that last. You see, in any business, you have to do a risk management analysis, where you look at what are the possible risks facing that business, what is the probability of those risks materializing, and what is the impact. And so you may find some risks are very, very, very low probability, but very high impact. And some are very high probability and some and any other combination. Now risks, there are several things you can do. There are some risks, like for example, as the risk you're talking about.
All right.
There are risks that you don't want to take yourself. You have no way of mitigating an earthquake risk, for example, or a burglary risk. So you transfer it to someone else, and you transfer it to an insurance company in lieu of a payment of a premium. But now there are other risks that you can mitigate. Like for example, if you're in business, you want to mitigate against the risk of bad governance. Then you want to put in a proper structure of governance. You want to mitigate your, like for example, most SMEs, actually the owner and the business are one.
Okay.
So the issue of mortality is a very big risk, that the continuity of that business will not, the business may not even outlast the guy if the guy dies. And in the insurance sector, you'll find the scheme and insurance. So you're able to transfer that risk to someone else.
Right.
And some you're able to mitigate by some of the measures you're able to take in. But having said all that, there are things you cannot foresee. Nobody foresaw COVID. So when that happens, then that one you have to think on your feet. You have to evaluate your business, look at the external factors, what is going on, and what do I need to do. Like now, the most business, what you have to do is basically just bring in all your cash, conserve your cash, and try and just see tomorrow. Once the horizon is clear, then you can start doing your plans.
Okay.
So to answer you, there are those, like my brother said, the acts of God, where you may find even the people you had contracted with to deliver on those issues may invoke the force majeure clause, the acts of God.
Okay.
And once they invoke that, they walk away from that liability. So even now, with this, what we've seen, and with other calamities that have come, as you're doing your business contracting, you need to be very careful about those clauses, that the umbrella is not taken away the time the rain starts beating.
Yes.
Yes.
Okay. The personal part where he mentioned governance, sometimes you as an individual, you as the proprietor of this particular business, you can have measures in place. But we've always seen situations whereby people even bypass those particular roadblocks that you've put for them, and they still end up putting you in financial ruin. So how do you even foresee bad governance within your own organization? How do you foresee what maybe your partner, who could actually even be your spouse, what they're doing, and be able to separate even business from pleasure, business from family? Because sometimes if your parents come knocking at your biashara and they want to take a service or a product from your biashara, how do you even, block yourself against that?
Okay. Basically, how prepared you are as an individual will protect you from any external force. Most people think they are helpless and situations come and take them over.
Okay.
So you'll find two businesses. Yeah? He has a business, I have mine. He has put a small cushion, an emergency fund, in the event that he's unwell.
Right.
In the event that there's a cash flow issue. He has put a small reserve.
Right.
I'm running my business. I have put no measure. So cash comes in, cash goes out. There's a very big difference between our businesses.
Okay.
Over time, if I decide that 10% will be there for to act as a buffer, I can decide over time as my business thrives, I'll increase it to 20%, 30%. I'll take in 10% and reinvest.
Okay.
Buy some treasury bills, buy some treasury bonds. Have that liquidity so that when there is a crisis, whether it is personal, even if it is family, I have somewhere where I can be able to pull in something without going into debt or ruin. So that planning and the growth in those plans is crucial.
All right.
You talked about my parents coming in. If I decide that my cash reserves will not go below, let's say, for example, $500,000. If my parents come and ask for 50,000 and I give them 50, I'm at 450, I'm not too badly off. Now, if he decides to give that 50 and he operates on 100, he will be at negative.
Yes.
So those little controls, which are known to you as the business driver and owner, can really protect you. So it is important, and this is my appeal, especially to SMEs where the business and the person are one. Don't give that control, of your business to external factors and then blame external forces. Come up with your plan, have your processes, have those limits, those rules.
Yeah.
If you are running a business with your spouse, we must know that in the business, we are partners.
Yes.
Professional partners. Then at home, we are partners now,
Yeah.
marital partners. And this is a culture you must cultivate even in your processes. And let me tell you, there are businesses that have been run very well by married spouses. And the husband knows the finance manager is the wife.
Yes.
And the wife knows the CEO is the husband. But they have spelt those rules because they realize they will not have a lifestyle without that business.
True.
So my take-home, my summary is you spell the rules, put in the governance, and keep reviewing every year. What did not work? Fix it. What do you need to introduce? Like now after COVID, I'm assuming a lot of businesses have learned a lot of lessons. Put those processes in place. The next time a crisis happens, it will not hit you as hard.
Right.
Yes.
Wahome, again, coming back to you on this one. You've mentioned a couple of instances there, or a couple of reasons as to why a business would run into financial ruin. For someone who's watching right now, and they are running an SME, and they're just listening to you, and they're like, wow, I actually never thought about this in that particular way. How then can we put it into practical use? How can we actually mitigate against some of those things that you've mentioned, especially even the acts of God and the other situations that we've mentioned about mismanagement from your academy, from your point of view?
Thank you for that. The bottom line is that we have to do risk management at a personal level and at a business level. And there are three ways of managing risks. The first area of it is identify the risks.
Okay.
It's always good to know what are the risks I'm facing. And life is a risk. That means everything else we do comes with a risk.
Okay.
And once we identify them, then we ask ourselves, which ones can we avoid? What are the risks that I can be able to avoid? So risk avoidance is critical. And what I'm saying at a personal level, can I live a lifestyle and avoid all those things that maybe will interfere with my health? Because if they interfere with my health, I'll not be able to I'll not be able to be as productive as I can, because I'm likely to get unwell. So I can avoid a few things. If I think it is very risky to drive on the roads at night, I can avoid night driving because it is risky at night. So we look at avoidance. What can I avoid? Can I avoid having a reckless lifestyle where I'm actually drinking or going out with multiple partners? I mean, it's simple to see it from that perspective. The second area is risk reduction. We're looking at, can I look at a way of preempting risks before they arise? Okay? And when you're looking at simple things, if you have a business premises and you hire a watchman, it actually means you will not get a lot of intrusions. You know, you put in security cameras, you put in systems, and it's the same thing we can actually be able to do even at home.
Right.
So we actually trying to minimize the possibility of the risk occurring.
Okay.
But the second level is actually reducing the severity, if it did happen. Just to give an example, in most workplaces, we have firefighting systems.
Yes.
We have fire extinguishers, we have hydrants, we have fire assembly points, but a lot of times we don't think about it at home. There are not that many homes with fire extinguishers,
right,
with a fire blanket, with a first aid kit. In fact, I say there are not even that many homes with a cat.
Right.
You know, how does a cat play a part in risk management? It will stop the rats and the snakes from coming home.
Okay.
And the last part we can think about is what we call risk transfer. Because of all those perils we cannot be able to handle, we can do risk transfer. And that is why I can buy medical insurance, so that if somebody gets unwell, it is somebody's business to pay those bills for me.
All right.
I can actually insure my business that if it burns, somebody will give me money to start it again. So we do risk transfer, and risk transfer is where insurance comes in.
All right.
So three ways: risk avoidance, risk reduction, and risk transfer. That's the way we manage risks. Whatever risk we have talked about can be managed that three ways.
All right. Thank you very much. Let's take a look at what's up. Whoever thought a cat would be an amazing business partner? Our question of the day, obviously we asked you, how can one stop financial ruin in a business? How can one stop financial ruin in a business? Let us know, you as a business owner, what are some of the things that you're doing to mitigate financial ruin? Has it even hit you, especially right now during Corona? A lot of us are complaining left, right, and center. Let's take a look at what you're saying on WhatsApp. When do you know that it's time to close down a business which is not bringing any profits? I am Morris. Okay, Morris, thank you very much. Wahome Ngare has told us very interesting things, and some of those things actually make practical sense. And Morris here is asking, once he has noticed that his company is getting into financial ruin, how does he know that, sasa, before nichome kila kitu, wacha nichomoke?
That would be informed a lot by the strategy you have for the market. Because, and how long you want to stay in there. Because there are companies where you're making losses, but your future outlook is good. So you're saying, for now, my strategy will move from profit maximization to loss minimization. So I'll just minimize my losses for now, but, and wait for the profit days to come. But that will be guided by the strength of your capital. On a balance sheet, basically, your capital is your strength. It is your buffer. So you can decide that I'll lead into my capital and survive.
Right.
Or you can just say, you know what, it's not worth it, I can walk out. So the triggers will depend on you. But there are certain things that are clear. If you're bleeding cash, if you're going down the loss avenue, if the outlook doesn't look good, then maybe you're not in the right business. But there are people who will, and again, it boils down to who you are in terms of your perception of risk and your perception of optimism. There are people who are very optimistic.
Right.
They will stay in something and you don't understand why they're still in this. And the people who will jump out so early. So again, that psyche plays in. But if at the financial fundamentals, you're losing money in terms of profit, you're not making money in terms of you're posting losses. On the cash front, you're bleeding money.
All right.
In that you're giving out more than you're receiving. And then at the marketplace, your market share is shrinking, if at all. Then that may be the time to leave.
Right.
Yeah.
Okay. He's talking about now the outlook of the company and how you need to understand. But you've been a banker for a very long time, and you probably understand, cash flow issues. And you mentioned that you need to have a buffer where, at $500,000, this is how much money should be in my account at all times. How do you even make sure that you're making all this? Because there's some SMEs that don't even hit that 500,000 shilling situation. So how do you make sure that your business is making enough profit and still you have money for all these other, risk, management systems that you're putting in place?
At the end of the day, we start a business to sustain us. Like Mutahi said, at the end of the day, it's all about my financial management. You don't start a business for the sake of starting a business. So if your business cannot sustain you, you're making a net profit and you cannot even pay your rent, you cannot buy food, you cannot survive, then what is the real viability of that business? So when you set up a business, you put money aside and you say, this is a capital I need to inject in order to run this business. I'm going to give myself 1-2 years for this business to be stable.
Okay.
As you're setting up, as you're growing, your life must continue. You must eat, you must live under a roof, you must be able to fuel your car, you must be able to educate your children. So when you're doing the numbers, the financial planning, those two numbers must coexist. The amount of money you need to run the business, not to run it down. Even if you're going to make a few losses at the beginning, which is okay, but in the long run, you will go to profitability. But know that these other numbers are still running. One of the things that SMEs do not do is that they do not compute a salary. Okay. So you run a business, your net profit is 20,000, you need 10,000 to exist, and it is not part of the computation. Remember, you need to reinject some of that capital. So you are not being paid. So anytime money comes in, you pay a bill. So that's when you get into the cash flow trap that Abraham talked about, because you've not computed numbers that are going to have a direct impact on your business. Okay. So make sure you compute an income as the owner of the business. Make sure that you're able to meet your basic expenses.
And these ones come from the salary?
From the salary. So you must compute. It's very interesting. We have SMEs. You find somebody who's running like a cyber cafe is paying salaries to the receptionist, etc. They don't pay themselves.
You know what? Hold on to that thought. Let's take a short break so we can understand. If you have a biashara, how much should go to your salary? How much should go back to capital? How much should go to savings and so on and so forth? Do not go too far. Remember, we're talking about financial ruin. How do you get out of it? We'll be right back. Wahome, can you hear me?
Yes, I can. Sound not so clear, but I can hear you.
Oh, okay. Pole sana for that. But now we are clear on each other?
You're much better.
Sawa sawa. Because on our side, uko salama kabisa.
Okay. I couldn't hear part of the contribution with the panelists along the way.
All right. Karibu sana.
But now you're very audible.
Sawa sawa. Let's hope it stays that way for this second half.
Okay.